All right, you guys, revenue-based financing has really evolved over the years. So it's also known as merchant cash advance. It's basically based on the revenue and the cash flow of your business. Now, I love revenue-based financing because it really opened up a lot of options. So it opened up a lot of options for minority entrepreneurs, for startups, for female entrepreneurs, for a lot of Main Street businesses who didn't know about this, who didn't understand. It helped a lot of businesses who didn't have great credit. So it was another option, right? But people didn't know about this kind of stuff, right? Even I didn't know about this when I was starting, right? And that's why we have the domino effect here to educate and inform and empower you so that you can leverage and make yourself attractive to lenders. Essentially, allowing for more approvals, right? I'm Dominique. I'm CEO and founder of Domino Effects Group, and we help founders such as yourself. We help businesses, we help entrepreneurs, we help investors, founders who are raising capital, right? Who are seeking funding, right? But they don't necessarily know where to go. They don't know where to get it. This is a common problem, you guys. This is a huge issue. So not knowing where to go really limits how quickly you can move, how quickly you can grow. And unfortunately, it's affecting a lot of certain people and certain demographics. All right, y'all, you know what I'm talking about. And so I love revenue-based financing because it's completely evolved. It's completely changed the dynamic of business lending. It's completely changed the way that you're able to access and capitalize on opportunities, right, that come about. So there's a lot of revenue-based lenders out there, you guys. Good thing about it is it's helped so many people expand. Okay, small businesses have been able to use revenue-based capital prior to, really the explosion of alternative-based lending, of revenue-based lending, which is part of alternative-based lending, alternative financing, which is financing outside of the traditional bank, right? And here we are stepping outside of the limiting barriers from the traditional banks, right? Which limited a lot of opportunities for small business owners. Okay, so revenue-based lending, what is it? Revenue-based lending is based on the revenue of your business, okay? And lenders are typically going to look at, they're going to want to see 3 to 6 months business statement. I work with lenders every single day. Every single day I'm working with these lenders. So I'm telling you what they're looking for so that you can leverage yourself, you guys. They're going to look at they want 3 to 6 months business statements. I typically ask for 6 months business bank statements because it helps me get a full picture. Okay, so lenders usually want to see that you're in business 2 years, right? 1 year's okay. And even there are some that do 6 months. But when you're over that, when 250,000, 150,000 you're asking for, then they're going to ask you for just bank statements. It's real simple. When you go over that 250,000, then they're going to want to see a more deeper dive into your financials, right? But that makes sense, right, you guys? You're asking for a lot of money, so you can expect that they want to do a deeper dive. So basically, lenders are going to look at the last 6 months of business revenue, and then from there, they're going to take an average, okay? I'm going to give you the sauce on what they're looking for, all right? I want you to know. So they're going to take an average. They're going to give you a percentage of that average, okay? Now, this can be anywhere from 100% to 150% of what your monthly gross revenue is, okay? Sometimes it could be a little bit more depending on your relationships with the lender, depending on your relationship on how many times you've even received funding from that lender. But they'll look at, the dollars, the amount of money that's going into your bank account on a daily basis. So make sure that you're keeping money in your bank account. You don't want to be going all the way down to zero, right? Because they're going to be looking at that. So the total is and that's based on the total amount that gets deposited into your bank account on a monthly basis, based on how much you're keeping in there, right? So how long have you been in business? The industry you're in, do you have business credit? And we talk about business credit here, okay? What's your personal credit? If you have bad credit, can you get funded? Yes, but keep in mind here at the domino effect, we want to be doing things that are going to and taking steps, actionable steps that are going to make us attractive to lenders. So keep in mind that you need to be working towards better credit because it's going to give you better terms, right? So keep that in mind, y'all. So that's going to give you an idea of what the approval is going to look like, taking in all of those things into factor, right? All of those factors into play. So it's also going to give you an idea on the dollar amount and the length. On the revenue-based and financing side, lenders are going to look at the term. So they're going to look at, and I'm looking at my iPhone here, but they're going to do anything from a 6-month to a 36-month term. Now, can you go longer than that? Yes, but it depends on your situation, okay? Now, once you get approved for the dollar amounts, you guys, okay, and I'm giving you the information so that you have it. Revenue-based financing is going to be based off of factor rate. So let's assume, and this is just for easy numbers, okay? Let's assume that you get approved at $100,000, right? You get approved at $100,000 at a factor rate of 1.10, okay? You multiply the $100,000 by the 1.10, that's going to give your total repayment 110,000, right? Y'all knew that, right? See, I can't see you, but I'm seeing you nod, okay? It's going to give you a repayment of $110,000, okay? Now, sometimes, depending on the lender, you could have an origination fee. The origination fee could be 1 to 3%, okay? That might get deducted out of the loan amount, okay? That could get deducted out of the loan amount, and that goes into the total cost. So now the great thing about revenue-based financing, you guys, is that it's based on an agreement, right? So these agreements are based on like a purchase and sale agreement. So those typically have no personal guarantee. You're not using a personal guarantee when you're looking at revenue-based financing. You're not using a personal guarantee when you're looking at revenue-based financing. Sometimes I have seen business owners push for a term loan. We've seen, our partners have seen business owners push for a term loan or a small business loan and move away from the revenue-based financing. And I mean, you can do that, but usually it's just because people are unfamiliar. If you don't know what you don't know, right? So if you don't understand, then of course you're gonna go with what you don't, what you know. So what does that mean? Well, what that means is that the lender is purely lending to you based off of your revenue. They're giving you an advance against your future sales at a discount today. So they're going to purchase from you. Let's take the example that I gave you before, okay? 110,000. 110,000 of the future sales, okay? They're going to give you 100,000 today at that 1.10 factor rate. And then they're going to collect that money from you until they hit that $110,000. So a lot of lenders will do this. Okay, they'll do this through, your credit card sales. They do it through your daily payment. So they'll take it back through a daily payment. They take it back through a weekly payment. They could take it back through a monthly payment, depending on the lender, until they actually get back to the full amount that they need to collect. The great thing about this, guys, is no personal guarantee. No personal guarantee. So meaning, you sign this agreement, you sign to move forward with the lender, you're verifying and you're confirming everything you put in here, you're going to abide by, right? You're going to stick to the terms. You're going to repay, right? You're going to make sure that you're paying, and you're not going to do anything unethical as far as trying to avoid paying your loan back. You're not going to just dip out. The great thing about revenue-based financing is you can get up to the 250,000. So 150,000, 250,000. You're only turning in a few months of business bank statements, y'all. There's so many options out there. There's just so many, and you just got to get your business bank statements together, all right? You don't need a whole bunch of financials if that's the amount that you're looking for. Obviously, if you're looking for more, like I said, you're going to be doing a much deeper dive into your financials. But it's really cool because they're not going to be, you don't need like 10 years in business, 5 years in business, 7 years in business, even 3 years in business. There are lenders out there that will work with 6 months time in business, and they work with a variety of credit ranges, okay? So even if you've been to the bank and even if you've been denied, don't let that be the end all be all for you, okay? Yes, that rejection hits hard, I know it, but now you have a plan. Now you know where you can start from, all right? So there are other options out there. You're here, you're obviously clearly looking for the information, right? And the information is here. I'm telling you, there's so many great options. Revenue-based lending has really evolved. It has really evolved. It is a really great product, and you can use it to grow your business, okay? You should be using it. Not only that, you should be using business credit. You should be building business credit simultaneously at the same time, okay? There's no personal guarantee for that either, y'all. All right, there's no personal guarantee for that either. Listen, friends, this is a no-brainer. Okay, it's a no-brainer, really. I want to see everybody win, and we have the tools necessary to do so on the platform. We have successfully done so for many clients. Our partners have, I've told you, already secured over 5 billion in funding. And it's just continues to grow. So make sure you're connecting with the right resources. You're here at the Domino Effect. If you need to do a deeper dive, come to the Let's Get You Funded free webinar. It's February 15th. It's every month. And we'll do a deeper dive into this and we'll provide you with the resources as well. But the other reason that why we love revenue-based financing, well, it's fast, it's easy, and it's flexible. Okay, it's flexible. And it's a really great way to provide ongoing capital as you grow, as you scale, and it's much, much more flexible than a traditional bank. Okay, much more flexible than a traditional bank. If you like this video, then share, post, collaboration is key. And please, you guys, reach out. It's totally free to schedule a consultation. It's absolutely free to speak to one of our advisors and get the blueprint. Figure out where you are. If you're a founder at day zero, that doesn't necessarily mean you're at day zero in your business. Maybe you are, but what it means is you're day zero in your understanding of the capital that's out there. Day zero and which program is right for you. And day zero and understanding the best way or how to even access that resource. So once we've helped you identify where you are in your understanding, then we help connect you with the right resources that align with where your company is headed. So get connected today. Thank you for coming to the Domino Effect. I'm Dominique, and see you next time. Let's get you funded.